Stock markets look fine right now. Indices are holding up, volatility feels contained, panic is nowhere to be seen. But under the surface, three signals are telling a very different story, and most stock investors are ignoring them. So, most investors only watch the price. If prices are stable, they assume the risk is low. But markets don't communicate risk through stocks alone. They spread signals across the asset class. When stocks, currencies, bonds, and commodity all tell the same story, markets trend smoothly. When they disagree, markets enter a transition. And right now, they're clearly disagreeing. Let's start with the dollar. In a truly risk on environment, the dollar usually weakens. Capital spreads out, risk appetite rises, but right now, the dollar remains firm. That tells you investors are still defensive, even while stocks look calm. A strong dollar doesn't predict a crash, it signals a caution. It says global capital prefers safety over aggressive risk taking. Now, that is not panic, that is hesitation. Now, let's look at the bond yields. Yields are not collapsing, but they are also not confirming aggressive growth. Bond markets are saying growth exists, but confidence is limited. Bonds often detect the stress before equities do. Equity investors often dismiss bonds, but bonds price the future cost of money. So when the bonds hesitate, equity optimism eventually feels pressure, not suddenly, gradually. Finally, look at gold. In a carefree market, gold usually weakens. Right now, it is holding firm, not surging, not collapsing, quietly refusing to relax. Gold does not move on the headline, it moves on trust. So when gold stays steady while stocks rally, it signals an underlying caution. Big money is hedging, not exiting. So individually, none of these signals are alarming. Together, they matter. They describe a market that is unsure, not collapsing, not booming, transitioning. Markets rarely warn loudly, they whisper first. And right now, dollar strength, bond hesitation, and gold stability are whispering caution. If you want to understand markets beyond the stock prices, subscribe. This channel is built for that. Thank you.